All right, we're back now. Good morning, everybody. Everybody. Hello, guys. Good morning. Sorry about the delay. I think we're starting right now. These are morning market review. We do this every day, every trading day, as you can see, Monday to Friday. One solid hour of analysis, guys. I think we're already behind time. Okay, so sorry about that. There's network issues going off and on. Well, I guess we're still in Nigeria, where network is not fantastic. So I think the room is full right now. We'll just go straight to fundamentals. Let's look at the fundamentals. So I'll go straight quickly to forexfactory.com. Let's look at what we have there. So there are other websites you can use. You can use FS Street. You can use My Facebook. You can use the popular trading economics. But this is Forex Factory, guys. So today being Thursday, right? 27th day, guys. I'm sure you can hear me, guys. So let me share my screen so that you can equally see my screen, okay? So I've been able to share my screen there. This is Forex Factory, guys. So for today, we'll be expecting by 9 a.m., we'll be expecting the gross domestic product release data from from Switzerland, that is Swiss franc, right? And that's quarterly, okay? So it measures, it's a simple one. It measures the total value of goods and services produced in the economy. So it's a broad spectrum used in measuring the health of an economy. So they are trying to see what that economy is doing, right? So the forecast is actually 0.2%. So the actual might exceed that. So if they actually exceed that, then of course, it means that the economy is expanding. So we're expecting some momentum into that currency CHF there. Then also by the same 9 a.m., we're expecting Spanish flash CPI. Okay. Now this one is a flash CPI, and of course it's year on year. And then don't forget this one is a medium impact, meaning medium volatility. Okay. So we love the high volatility. Let's fast forward downward. So by 2:30 p.m., we'll be having the high volatility that will be on GDP also from the US, right? That's quarterly, and also unemployment claims. So what do? Just make sure you deal with your normal technical analysis, and of course, put your stop loss, put your take profit. Now, by this time, 2:30, you want to come and check what is the result of the news. Usually, if the for the GDP, if the actual value exceed the forecast value, it's a sign of strength, it's a sign of momentum in that currency, the domestic currency there, the US dollar. The unemployment claim, those filing for unemployment benefit. If we have more persons filing for unemployment benefits, it tells you about what is happening in the economy in terms of unemployment. So the forecast is 222,000. All right. So they are forecasting 222,000 will be filing for unemployment benefit in the previous month. Right. So let's wait until we see the forecast, the actual. Okay. So this particular one, unemployment claims, is actually every week, right? It's every week. They have changed it every week. Before it was once a month, now it's every week. These unemployment claims, those filing for unemployment benefit, that gives you an idea of the unemployment situation in the US, as big as the US, guys. So for today also, we have durable goods month on month, preliminary GDP. We'll also be having pending home sales, right? Home sales is also another fantastic news that can pump in more strength into the dollar. The dollar has been going down for some time, so we need some strength. So all of this can all put forth. So by today also, we'll be having the G20 meetings. That's also a major impact. So a lot of things will be affecting our instrument, our currency pair. The market for today. So guys, you want to keep a close one on your chart, on your trade. Also, always make sure you have your take profit and stop loss in place, right? And don't place a trade and say, let me go and come back. No, don't go and come back. Once you enter a trade, you put a stop loss, you put your take profit. Stop loss is what is stop loss is the hallmark of a trading success, right? So if you must succeed in trading, you must always have a stop loss. Meaning that if the trade is wrong, then your capital is not at risk. The amount you specify is only want to be at risk. And of course, you can have better trades, make better money, big take profit and all of that. Position yourself to have big profits. But once you're in profit, adjust your stop loss to the profit zone. That will protect the profits running on the trade. Why stop loss protects your losses, protect your capital, right? Now, stop loss can also protect your profits. Once you're on the profitable trade, you adjust your stop loss into the profit zone. That will give you an exposure into making bigger profit. And those big profits, in the long run, they get to cover up the stop losses. And that's how we have trading success, right? Or that's how to succeed in trading. So, having said that, let me switch again to my chart so that we can do some quick technical analysis. And of course, to be good, okay? So let me switch over to my chart now. I started this because I started this without introducing myself. My name is Emmanuel. So those of us just joining us, this is Emmanuel Udogu. So let's analyze quickly so that we can redeem the time. So starting from USD index, wow. Starting from USD, now. I love what the dollar is doing here. Is actually a show of strength, right? So the dollar is telling us, hey, look here, I'm coming back. I'm coming back. So, and of course, that's exactly what we're seeing here. So I can look at my left-hand side. So, guys, we are back again. I'm sure you guys can hear me now, but let me do a sound check here because the network is not too, the network is just fragile. Just get to the chat room and just type chat, and that will indicate you can hear me. Chat. So if you look at the left hand side, you can see that the instrument USD index has been trying to push upward, right? But then this gap up here is actually a good one, okay? So it took advantage of this demand zone, right? It took advantage of this demand zone. Then from there, thank you. I can see your response. So it took advantage of this demand zone. Then from there, it gained some strength and push upward. Okay. So my own forecast is that we are really going to push upward. Okay. So it may just come to test another support zone, right? Then a mid level, right? It may just come to test a mid level. Then of course from there we may be seeing it pushing up and breaking this level. Okay. So between now and the end of this week, that will be today and tomorrow, we should be seeing this instrument breaking this level. Otherwise, the instrument is just ranging, okay? So this is actually a range, right? This is the upper band of the range. This is the lower band, okay? So, but I'm expecting a break out of the range, okay? Should be able to break out of the range. So, having said that, quickly, let's look at which instrument are we considering right now. Let's do Euro USD. So this is Euro USD, guys. I hope you are trading Euro USD. So if you look at Euro USD really quick, this is the highs of the market, non-high, right? This is the high of the market, and this is actually the lows of the market, right? Okay, of the recent price action, as you can see there. So the market is actually moving between the highs and this low, right? So this is what we call a ranging market. So it's always good to catch a ranging market very early. And this can be tend to be early, even though it's already 3 to 4 days. Right? So this instrument is actually in a range. So if it's in a range, what do? You buy on the support. This actually is support. So this is not a bad area for you to buy, right? You buy on the support, you put your stop loss just below that level, such that if you are wrong, of course, a tight stop loss will save you. Then, of course, you have a take profit at the top there. So this is actually a range, right? This is a range. So if you're looking for a ranging market, the market has entered into a range. So when will it break out? So these are the areas where it can break out of the range. Okay, so it can break up here or it can break down here. Okay, but for now, we're expecting this kind of movement, being that we are in a range. So we're expecting it to do something like this, right? But then don't forget, if you're in a range, you don't expect it to last for long, right? You don't expect it to last for long. Just like if you're a president of a country, you don't want to stay. You can't stay there for long. 4 years time, you are out, okay? Or if it is in Nigeria, then you're guaranteed 8 years. Oh my goodness. But then let's look at this. So I'm trying to say it's the range does not really last, right? The range. If someone is saying you cannot see my screen, let me check why you cannot see my screen. Share again. Now check again. If you cannot see my screen, check, please. So what you need to do is you have to be very, very proactive here in trading. So if we have touched the support level, there is a good time to buy. Okay. So if you want to buy now, it's not a bad time, it's a good time to buy. Okay. So this area is a good time to buy because we are on a support. We're on the support. Now, but if you buy, your stop loss should be down here. Put your stop loss here, right? So because if this level is broken, then the market is going down. Okay. So, but if you are not taking advantage of the movement right now of the range trading, so you want to wait until the market breaks this area of support, of this area of support, or the market breaks this high. So these are the two levels you have to wait for. So if it breaks this high, this particular one I'm doing right now, if it breaks this high, so is this through my screen is not showing? Okay, okay, just hold on a bit. So what can you see right now? You can see Forex Factory, I'm correct, right? So you can see Forex Factory. So let me share it again. So what can you see right now? Now, check. What can you see right now? Can you see my chart? Can you see my chart? Okay, you can see charts. Okay, can you see charts? Okay, fine. Bemski, you can see my charts. Most of you are saying you can see my chart. Okay, you say you're seeing someone else's. As to how to is that one? Okay, you can see my chart now. So most of you can see my chart. That's fine. Those of you that cannot see my chart, please, you have to do something on your. We can see your chart now. Okay, fine, fine, fine. Check your view. If you cannot see my chart, check your view. Perhaps you have switched from my own chart to maybe somewhere else's view. Thank you. Everybody now can see my chart. So I think that will be all for Euro USD. Those of you that were not seeing my screen, I'm saying Euro USD is on a range. So we have a trending market, we have a ranging market, right? So Euro USD is on a range. So this is the range right here, as you can see. So the market is actually ranging. That's what I'm trying to say. It's ranging. So this is the top bound, this is the lower bound of the range, right? So on the range, you want to take advantage of buying on the support and selling at, I'm trying to do a recap. So Mr. Jerome, I'm trying to do a recap. So I'm trying to do a recap yet. You're saying somebody else is sharing the screen. How possible is that? So I'll look into it, okay? So Mr. Victor Abalendo Nigo, please, can you put off your camera? Thank you. So I've shared my screen, guys. Can we continue now? So we are saying Euro USD is on the range, and this is the range, guys. So if it's on the range, there are buy opportunities on the support, sell opportunities at the resistance, if you like, at the supply zone. So this is a demand zone, this is a supply zone, okay? So, but then if you're taking advantage of a buy on this level, then of course your stop loss will have to be just below it, such that if that level is broken, then of course it means market is not going down. Then you pick a sell going down, right? That's what it is. So we're on the range. So if you take advantage of the buy, your take probably have to be up here, and of course your stop loss will have to be down here. Okay. So that's what happens until we are out of the range. So let's look at GPUSD real quick. GPUSD. I hope everybody's good. We are back right now, guys. We are back. We are back. You can hear me, right? It's just remaining for you to see my face, but you can hear me. So let's look at what we did on GPUSD some last week, right? This is last week. Last week, if you can remember, those of you that join us every time, every week, thank you very much, guys. We are really proud of you. You're the reason why we are here. So keep it up, okay? So by last week, we analyzed the Euro USD, so GPUSD. I would say GPUSD is on a range. How many of you can remember? How many of you can remember this? Some of you can remember this, right? Those of you that joined. So let me see your hand up. So let me see you say yes or no if you can remember this. Let's go, let's go. I'm also using this for a sound check, okay? Because I just reconnected again. So if you can see, okay, you can remember this, okay? Immaculate Ioma, okay, that's fine. You can remember this. So we said who else again? Who else again? Who else joined us last week Thursday? So you can remember this. We said this instrument GBUSD is on a range last week, and then now we are saying the same thing on to Euro USD. That Euro USD is on a range, right? So let's see. So this is tenants of a range, right? Then last week we said it did a spring, right? Some of you can remember that was spring. So it did a spring. This spring signifies that it's trying to clear the stop losses that will be below this level. That simply means it wants to go up. Okay, and we drew this level. So I think at the end of the day, it broke out of that particular level, and of course, and start trading up, right? So we have, so it has broken out of that level. So breaking out of that level, of course, it's a sign of momentum shifting to the upside, right? So the instrument is not on a range anymore, right? Now it's Euro USD that is on the range. The instrument is not on the range anymore. Rather, it is trending upward right now because we have seen wake-up structures to the upside. I mean, the market have traded above the highs, right? In fact, we touch 1.27. We have touched 1.27 and even traded above that 1.27, right? So we have touched 1.27 the first time in a couple of, I think, up to a month or two. We've touched 1.27. Then, of course, that's a whole number. That would be a very strong level of resistance there. So you drop from there. So the next target would be to smash that target. Don't forget, this instrument is this instrument is trending upward. This is what I mean. These are series of highs getting higher. Don't forget that. Then, of course, if you see highs getting higher, it's a show of momentum to the upside. Then, of course, we have seen the recent high breaking above the previous high, breaking above this other high. So that's a show of strength to the upside. Okay. Now, if you look at my moving average also, you can see that the 21 period is fanning very beautifully above my 50 period moving average. Okay. Then also, if you look deep, you also see that we have what we call a bullish engulfing here. This is a bullish engulfing. Okay. Beautiful. This is an upward trend that is fine and set and sweet. Okay. So one would like to this is a good area where one can take a trade, right? So because we on the 1 hour time frame, we are seeing a bullish movement there, right? Very beautiful bullish movement. Okay. So that's a good place to take a trade, and of course, and all of that, guys. So that's a good place one can take a trade. So because we are already seeing the market is giving us higher highs and of course higher lows. Okay. So but this area is actually a demand area. So that means anywhere around there, the aggressive ones can enter, the conservative ones can wait for the market to maybe retrace again. Yes. Then of course, but then this is the tenet or the shape of what the chart should look like. So because we just broke out of I think we broke out of what we call a range, right? We broke out of a range and we are out of the range, guys. Since we are out of the range, we are seeing momentum pushing to the upside. Don't forget, the dollar is still there, okay? So when you're trading against the dollar like this, you always want to have your tight stop loss, your close stop loss in case of volatility pushing to the downside. So guys, I don't know whether you got some value. Now let's look at another instrument. Let's look at gold, for example. So the last time we were here, we said gold is going upward. Now gold heard us when we said gold is going upward. Gold said, no, let me do downward a little bit. So guys, the instrument gold right now, see on the H4 time frame, somebody called me and said, is gold still going upward? Is gold still going upward? Now, this instrument gold, right, have the capacity to touch 3,000. It has the capacity to go touch 3,000. And so, but then it will not just run straight to that 3,000 like that. It will need to do a lot of dribbling. Of course, those dribblings are what the market is about, right? So if you watch carefully, let's see whether we can still see opportunities to buy this gold. Somebody say, but buy, why not sell? Somebody is thinking, Emmanuel, buy, why not sell? Buy, why not sell? You're the one thinking it. I know you're thinking about it. I know you're the one thinking about it. Now, this heavy trend that has been pushing upward, I think that trend has not died down. Okay, the institutional traders are still looking at this instrument pushing upward. But it will need momentum to continue going upward. It need more momentum. So momentum for a buy is usually when the market offer discounts. Right? Let me take it again. Momentum for a buy is usually when the market offers a discount. For example, this instrument traded upward forcefully to this level. Let's look at this. It traded upward. I mean, gold traded upward forcefully to this level. You can see this level, right? So this level was a high in a recent time, and that was a 1 sorry, that was 29,2941. Okay, this is the highest price in the recent time. But guess what? It wants to still go up, but there it lacks momentum. So what's the next best thing it did? The next thing it did was to offer discounts. So this is actually discount. So that means So this is actually discount. Discount means the market trading to the downside, right? So on an upward trend, when you see a big move to the downside, that is what we call discount. Okay. So it's offer discount opportunities to buy more, opportunities to enter for those that are late, for those that miss. So this is another discount again, right? So you notice every time the market offers discounts, I mean the market offer lower price. So if the word discount is confusing you, just replace it with low price, okay? So anytime the market offers lower prices on an upward trend, a very strong upward momentum. So even fundamentally, gold is strong. So technically, it is still strong. On the H4 time frame, I know you're looking at 15 minutes time frame right now, and you're using your phone to look at it. You're seeing series of red candlestick. But then we are doing top-down analysis. So that means I'm considering what the big players, if you like, the big money are looking at. Okay. So if you align yourself with the big money, the big players, and of course, come down to a much lower time frame, like 15 minutes, and take a trade, most of the time you win. Okay. So if this is a discount, this is a discount. Don't you think this is also a discount? Because it was now very clear to everybody in the world that gold is going up, gold is going up. So anytime everybody is thinking a particular way, now the instrument or the market tends to do the opposite. That is how the market makes money. Everybody is thinking a particular way, it's going up, it's going up, it's going up. That's when it now start going down. It's going down, it's going down, it's going down. That's when it now start going up. So whenever the whole market is extra saying the particular thing, the market tends to do the opposite. So everybody now has concluded gold is going up and they are buying, they are buying, they are buying. Of course, it wants to do a retracement. Why? No momentum again. Remember, for a buy, you need a sell. For a sell, you need a buy. Okay. So the market is trying to get the sellers right now so that the buyers can engage again. And that's why we have the discount. I hope you understand me. So, sir, if this fall right here, now look careful. This is the highest it went, 29, right? 29. Now, if this level here was a discount, then this level should also be a discount. Okay, so the market is still trying to offer some discount. So these are the levels you want to look at for. The level, this particular level I've highlighted, they are the levels you want to look at for to buy. So let me even change the color so that you can screenshot it. You can screenshot it. This is the level I'm looking at for. Okay. So if the price falls down to this level, sir, then of course it's actually a discount. So those that want to ride gold to 3,000 because everybody's shouting 3,000, gold 3,000. Okay, now it's not just get to 3,000 like that. It will have to gather more momentum to do that. Okay, now don't forget gold have formed for us what we call relatively equal highs. So this is a relatively equal highs up here. Look carefully, this is relatively equal highs. And this is happening in the direction of the trend. What do you think? It's actually a magnet. It's a magnet for the price. It magnets the price. So that means if it's happening in the direction of the trend, it means there is a very high potential that this instrument will do something like this, to smash these highs, to smash it. And that time it may just take it to 3,000. Who knows? Who knows? So guys, I'm trying to say, now let's drop down to 15 minutes time frame and let's see whether we'll see some opportunities for that. Now on the 15 minutes time frame, guys, we are rocking a support. In fact, a triple, a three level there. So this is the reason why we like to switch over to a lower time frame. Okay, this is actually now. Can you see how close it is to my main level, right? So all of this can be your level for to look out for buy opportunities. Okay, all of this can be your main level. But if you look at this 15 minutes time frame, these are lows getting lower, right? Lows getting lower, highs getting lower. Okay, that's the tenets of a downward trend. right? So you don't want to take it, you don't want to be taken off guard, okay? Okay. So these two levels are levels that I'm looking out for a buy opportunities, okay? So usually these three levels, these relatively equal lows, but it is not in the direction of the parent trend. So usually the market may want to smash it, okay? So the market may want to smash it because a lot of traders might be buying around this area. So the market may want to smash it for that before going upward. So please make sure you screenshot most of this stuff. The market may want to smash it further before going upward. So guys, take note. So this is a situation where you enter to buy, and of course the market hit your stop loss, and later on, most persons will get angry and just abandon their chart. But most other persons will go back and see what has happened. So later on, it will later on move in your direction, but then you're already out that smash it. So guys, let's wait for the market to do that. Okay. So you buy where others where the market have smashed stop losses of other traders. Okay. So wait for the market to smash stop losses before you buy, okay? Wait for the market to smash stop losses before you buy. So traders right now will be jumping in to buy because of triple level of support area. So they would like to buy, they would like to buy. So you want to wait until the market have smashed. So please, if you have questions, just drop it, okay? Mr. Fex, if you have questions, drop it for me. I will check it. Because I think I started pretty much late and network was really bad. So I'm trying to say wait until this level is taken out. Wait on that level is taken out before you think of buying, okay? Before you think of buying. So guys, I think we have done Euro USD, GP USD. So you're asking where can we put our stop loss, okay? Now for this instrument gold, depending on the amount you're trading with though, because instrument gold is not for everybody. The instrument is a big instrument. So use what we call your risk tolerance to set your stop loss, okay? So look at your account size. Can you risk 1%, 2%, 5%? Use that as your stop loss. Otherwise, if looking at this chart, then we have to put your stop loss in a very far place, guys. I don't know whether you can be able to swallow that, okay? So let me drop to 15 minutes time frame and show you that. But the best method right now is for you to use because this instrument is a wide instrument. So these areas are areas where you can use as your stop loss. Just after when you notice the market has started going up, you can use your stop loss so that it makes it very tight. Okay. So I'm going to say wait until the market smash these lows again. Wait until the market smash these lows again. And so if you look carefully, this low is just equal to this other low. So wait until the market smash these lows again before you think of buying. And when you do that, use a very tight stop loss. So Euro USD, GBP USD, USD CHF. Let me get to the chart room and check the next instrument you want us to analyze. Otherwise, I will just go straight to US 100. Okay, for someone with 1 million naira, okay, now you're very direct. That's very good, Mr. Countryside. Okay, country cousin. That's definitely not your name. Okay, for someone with 1 million naira, your stop loss will most definitely be maybe your risk tolerance in this case, right? So maybe you can tolerate up to 5% of that. That would be about 50K, right? Stop loss, such that it's now very fast so that the market doesn't smash it yet. That depends on your loss size anyway, okay? But looking at the chart, you could place it below these levels, place it below these levels. Or you can maybe use maybe 3%, that would be 30,000 minus 30K. Just use what is comfortable for you, okay? By risk tolerance. So guys, you said we should do USD JPY, USD JPY, USD JPY. Wow, two of you asking for USD JPY. Are you guys in the same? Okay, USD JPY. Let's do that USD JPY. So USD JPY, guys. Mm. Mm. So I think our trade on GBUSD is still there. Okay. Those of us that took advantage of the buy on Euro US, me, I don't enter the buy, but if you took advantage of the buy By now, you should have been on profit, right? Because I said the market is on a support, good area to buy. So if you took advantage of the buy, by now you should be on a profit. Well, what about the GPUSD? If you followed me and entered GPUSD, by now you should be seeing some small profit, guys. So, excuse me. So USD JPY, where is my USD JPY? Where is USD JPY? Somebody should look for USD. Oh my goodness. Now I am having a trade already on the on Euro JPY, right? And that trade I'm selling, right? So if you want to join me, not bad. Not bad. So USD JPY very quick. USD JPY. So guys, this is instrument USDJPY. Quick one analysis here. Now, don't just be taking the trade direction only. Be understanding how we are getting about the direction. Okay, understand that. So let's do H4 time frame. The first thing I normally do is if you're joining me for the first time, it may sound a little bit confusing, right? But then if you have been joining us for some time now, you should know the way we analyze already. Like for me, what I like to look at, I do top-down analysis. I look at the higher time frame to know the direction the big money is taking the market to, is pushing the market to, then of course, drop down to a lower time frame. Let's start even with daily time frame. Let's see where our buyers will most likely fall to, okay? So every day we have what we call directional bias. So that directional bias is simply the direction you love to trade. Okay, following what the market is doing. So this daily time frame, this line I'm dropping right here is the demarcation line between 2024 and 2025. So this is the beginning of 2025, guys. So from 2025, I mean January 1st up till now, what do you think the institutional traders are doing? What do you think they are doing? What do you think they are doing to this instrument? Now, I'm not going to say it, but you're already seeing what I do, right? So please tell me, what do you think they are doing? Get to the chat room, engage me. What do you think they are doing, guys? So look at what do you think they are thinking? Not even doing. What are they thinking? What are they thinking? Hmm. So somebody must have replied. Let me see or let me get your response. Okay, Mr. Bami say Olufu, okay. They are thinking about selling, right? So they sold throughout January. What about February? February is ending tomorrow. So that means it's safe for us to say they are selling throughout February. Okay. So you can see that if you have this perspective, hello, sir, if you if for example you did this same analysis in January, I mean by the end of January. So sir, this is the end of January, yeah, right? This is the beginning of January. So by the end of January, they sold, right? They sold end of January. That will give you a thinking of what they are doing, right? The big money is doing. So it means from February or beginning of February, somehow, you'll be aligned to thinking that way. Even though not 100%, you'll be thinking, they sold January, most probably, So, and guess what? They sold this one. So now that they sold in February, what do you think will happen in March? Very simple, sir. So if you look at this analysis, they have successfully pushed this market, push it to the wall. And if you push an instrument or if you push someone to the wall, the guy wants to bounce back. Okay. So the wall is like this support, and of course, this is a daily support, a strong support. So for left for me alone, I'll be expecting now the momentum is downward. But I'll be expecting now. See, just like this momentum of January is downward. But guess what happened? The momentum of January was downward, but guess what happened? It got to, let me show you. Let me show you, because it is not just rocket science. It's analysis of the left-hand side. Sir, it's not rocket science. It's core analysis of the left-hand side. So watch, I went to the left-hand side to go and pick a support and dragging it into the future, right? Now watch, even though January was a downward trend, but guess what happened? When we moved down to a support, the market was forced to offer premium price. I mean, premium price now, not discount, premium price. Market was forced to move up. The next time it came down, it smashed that low to form a new low. So the same thing, we are working on that support right here. So I'll be expecting that kind of movement to be forced to move up again. Then, of course, the next time, smash that low to form a new low. Very simple, very simple. Now, it simply means if you have this kind of analysis, even though you're on a negative trade, you may want to exercise some patience on that trade, okay? Having said this, let's look at what H4 time frame is doing. I hope we got value from that. Let's look at what H4 time frame is doing here. H4 time frame, guys. H4, we're equally rocking a support here. You're equally rocking the support. So support doesn't mean you should sell, right? Even though the market is going down, sir, support doesn't mean you should sell. So what you want to do, you want to wait for some breakout of the support or break above. So let's go down to 15 minutes time frame. Let's see whether we can see some local support areas where we can take advantage of. Okay. Don't forget this whole area. This whole area is a massive. Now let me move this line. This whole area is a massive support. Now you see that's the advantage of looking at the higher time frame. Now you know areas that are massive support. So you know it is not just this area is not just an ordinary ground. It's not in no man's land. It's actually a massive support, right? So if for any reason you are on the sell already, okay, you should be ready to take your profits, right? So you look out for the next level of small support like this to be taking your profits. To be taking your profits. Now, what do we do? So on the support, we'll be expecting the instrument to bounce off to push upward. So these are the areas I'm looking at. If this instrument can bounce, can break this level, then you should be buying. Okay. So if it breaks this level, the next target would be to take out this high. So now, of course, that high is a relatively equal highs, right? That high is a relatively equal high. Remember, you always draw from the left-hand side into the future, the right-hand side. So if you break this level, you buy. But for now, you do nothing. You do nothing, sir. You do nothing. But then, if you want to force it to do something, then of course it's a sell. It's a sell right now. If you must force it to do something, it's an instant sell with your stop loss, just above this high here, above this high, then you take profit on this level. You must take your profit on this level, sir. So it's an instant sell if you must sell. Otherwise, you wait for a break out of this level, okay? But don't forget, this area is a massive area of it's a demand zone, right? So that means you take some effort for this instrument to break this level. But all we know that the instrument USJPY is closing this month tomorrow as a bearish month. So January bearish, February bearish. In March, we'll be expecting some movement, some push upward, some premium price offering to the upside so that we can have more sellers to push the market downward. I hope you got some value from that. Mr. Who asked that question? Mr. Okay. So we've done a lot of delivery there. Okay, I can see GBP JPY. Okay, you want us to do GBP JPY? Okay, fine. Let's look at GBP JPY. I know it's 9 o'clock. You guys are already leaving before me. Eh? Why are you leaving before me? I should be done. You're already leaving before myself. Don't leave, okay? Stay. All right. Let's look at, I know it's 9, but we started a bit late. So you said we should do GBP JPY, right? Mm. So GBP JPY on the H4 time frame. Let's look at what it looks like here. GBP JPY on the H4 time frame. So guys, we've been seeing a lot of whipsaw, a lot of dangerous macheting up and down. So that means this area is now on the H4 time frame. See what we're seeing right here, guys. It means the instrument is just destroying both up and down, guys. So what can we do here? Now that means that is actually choppy. This is what we call choppy. So the market is actually choppy. So if you want more detail, then you have to look at the left-hand side, right? So if the particular area you're looking at is looking choppy, I mean confusing, look at the left-hand side. The left-hand side, we saw the market break below this low to form a new low, smash this low also. Now, this is the last recent high we saw. Now, the market failed to smash that high. It got so very close. That means this high must be a protected liquidity. So that means by and large, the instrument is still largely on a downward trend. So if you look at it on a monthly basis, what can we see here? This is the opening of the month, right? This is the opening of the month. This is where the market is right now. So that means on a monthly basis, we are still bearish, right? On a monthly basis, we are still bearish. January was bearish. February, we are still bearish, right? Okay, so that means that's also give us some level of information to work with. So back to the H4 time frame, guys. So what can we do here? So since we are still bearish and the market has offered lower lows, this is a low lower than this low, a high lower than this high. So this lower low and lower high. So it simply means what can we do here, guys? We can look for opportunities again to sell. So let's drop down to 15 minutes time frame, makes it more clearer on the 15 minutes time frame, guys. So on the 15 minutes time frame, we are seeing the market is gradually pushing into what we call an ascending triangle, guys. If that one is sounding new, okay. So this is actually an ascending triangle. So this is that one is pushing to the upside, and of course this is actually pushing to the downside, as you can see here, right? So you either use this one. This one is a good one to use. Okay, so because that other one was a spike, so this is an ascending triangle. So this ascending triangle simply means the market is squeezing in. There is a squeeze of the market. There is a squeeze of the. If there is a squeeze of the market, so what do? You do more of waiting. So let me zoom in so that I can make it clearer. So let's see what we can do here. Okay, the market keep bouncing off the support, right? So we have a mini level to look at for right here. Don't forget the higher time frame is still bearish, okay? So we have a mini level to look at for, and this is this level right here. This is a mini level to look at for, right? So that means we are not doing anything that looks like buying, okay? Because it is at this level, and it has been respecting this level for some time. So what you want to do, you wait until the market gets to this level, that you can sell from there. Wait until the market gets to this level, they can sell for there to smash these lows, because I still want to follow up what the higher time frame is looking like. I still want to sell. Okay, so if you wait for the market to smash these highs, because if the market is going to sell, it has to offer premium price. Wait for the market to smash those highs before you can sell. So guys, let me look at the chat room again. Questions and questions. So, Mr. Victor, you got that analysis there. Thank you very much. You said we should do US 100 and T40. I'm afraid I cannot be able to do that right now. It's past 9. I also have seminars for today. So, guys, my name is Emmanuel. So, thank you very much for joining us for today. 09026264507. Emmanuel Udogu, that's me there, guys. This number is on WhatsApp. Thank you very much, guys, for joining us for today. Join us tomorrow for another exciting section. Remember, we are also recording this live on YouTube, so that means you can watch it again on YouTube, but you get enough value. Signing out for now. Bye for now.